Hey everyone, welcome back to the channel. Today we're exploring a timeless investment that has proven its worth for centuries, gold. Now you might be wondering, why is gold still relevant in our modern world with all the digital assets and complex investments available? The truth is, gold brings something unique to the table that other investments can't replicate. In this video, we'll break down why buying gold could be one of the smartest moves you can make for your financial future. Gold is much more than just a shiny, beautiful metal. It has a special status in the world of finance because it acts as a safeguard against inflation, a hedge in times of economic uncertainty, and a powerful way to diversify your investment portfolio. While stocks and currencies can rise and fall, gold tends to hold its value over the long term, even increasing in worth during times of crisis. Imagine having an asset that doesn't just keep up with inflation, but often performs well when other investments struggle. By investing in gold, you're not just buying a precious metal, you're adding stability and resilience to your financial future. And with the global economy facing so many uncertainties, there's never been a better time to consider what gold can do for you. So let's dive deep into how owning gold can protect and grow your wealth over time. We'll explore why it's considered a safe haven asset, how it can provide security in volatile markets, and why it's been a trusted store of value for thousands of years. Stick around, and let's uncover the many ways gold can play a powerful role in helping you build long-term financial security and peace of mind. Next, let's talk about another major reason people turn to gold. It's considered a reliable asset in times of economic uncertainty. Right now, we're living in a period of rapid change and unpredictability, with the global economy facing a mix of challenges, from political tensions and trade wars to natural disasters and financial market instability. In these turbulent times, gold shines as a safe, stable option. Unlike other investments that can see drastic price fluctuations, gold has historically held up well when the economy is unstable. People often refer to it as a safe haven asset, and for good reason. When stock markets fall or currencies lose value, investors flock to gold because it doesn't depend on the health of any single country's economy, company earnings, or central bank policies. This gives it a unique quality. Gold's value often rises when other investments are struggling, providing a buffer during financial downturns. Consider past financial crises. During the 2008 global financial meltdown, when stocks were plummeting and banks were failing, gold's value soared. It offered investors a source of stability and preserved their wealth while other assets were shrinking. And this pattern isn't unique to just one crisis. Across history, gold has performed similarly in many periods of turmoil, acting as a sort of financial lifeboat when times get rough. Another factor is that gold isn't tied to any specific currency, making it less vulnerable to issues like currency devaluation. When local currencies lose value due to high debt, inflation, or policy changes, the value of gold remains resilient. This is especially appealing in today's interconnected world, where economic issues in one region can quickly impact the rest of the globe. And let's not forget, during times of crisis, governments often respond by printing more money or implementing stimulus measures to stabilize their economies. While these measures might provide short-term relief, they can also lead to inflation and reduce the purchasing power of cash. Gold, by contrast, holds its intrinsic value, giving investors an asset that's likely to maintain or even increase in worth. Owning gold now can be a smart move to prepare for future uncertainties. It's like building a financial foundation that can withstand whatever storms may come. With gold in your portfolio, you're setting yourself up for greater financial resilience and a stronger sense of security. In a world full of unknowns, gold remains one of the few reliable assets that can help safeguard your wealth when it matters most. Let's dive into another compelling reason why buying gold now might be a smart move: the potential for its value to increase over time. Gold isn't just a steady, safe investment. It's also an asset with significant growth potential, especially in today's global market. But why exactly does gold have this potential to rise? And what factors could drive its price up in the coming years? First, let's talk about demand and supply. Unlike many assets that can be easily produced or increased in quantity, gold is a finite resource. Mining new gold is costly and challenging, and there's a limited supply on the planet. Meanwhile, the demand for gold continues to grow, both from investors seeking a safe asset and from industries, particularly in technology and jewelry manufacturing. This imbalance between supply and demand often leads to a rise in gold's value over time as more people want it, but the available amount remains limited. Global economic factors also play a big role. As we see more financial instability around the world, both in emerging markets and developed countries, investors are turning to assets they believe can withstand volatility, and gold is at the top of that list. When people feel uncertain about traditional investments like stocks or bonds, they tend to buy gold, which drives up its price. So the more we see fluctuations in global economies, the stronger the potential for gold to increase in value. Central bank policies are another factor. Many central banks, especially those in emerging markets, are increasing their gold reserves to reduce reliance on the US dollar or other foreign currencies. This consistent buying activity supports the gold price and often pushes it higher. When central banks add more gold to their reserves, they're essentially betting on gold's future value, which can encourage other investors to follow suit, further driving up demand. And let's not forget the impact of currency depreciation. When major currencies like the dollar or euro lose value due to inflation or economic policy changes, the price of gold in those currencies typically rises. If you're holding gold during these times, its relative value can increase significantly as the purchasing power of cash declines. For example, if the dollar weakens, it takes more dollars to buy the same amount of gold, effectively raising the gold price in dollar terms. Looking at the big picture, gold has an impressive track record of long-term growth. Over the past few decades, it's risen substantially in value, especially during times of economic stress. Many analysts believe that given today's economic landscape, rising inflation, supply chain issues, and global uncertainties, gold could continue to see substantial growth in the coming years. By purchasing gold now, you're setting yourself up to potentially benefit from future price increases, securing an asset that's not only stable, but also likely to appreciate. In short, buying gold isn't just about protecting your wealth. It's about positioning yourself to benefit from gold's upward momentum. As demand continues to grow and the economic landscape evolves, gold's potential for increase makes it a powerful addition to any portfolio. Starting now means you're capitalizing on today's prices and setting yourself up to reap the rewards of tomorrow's potential gains. Let's talk about one of the most powerful reasons to invest in gold: its long-term value. Gold has been treasured as a store of wealth for thousands of years, spanning empires, cultures, and economic systems. In a world where financial markets, currencies, and governments rise and fall, gold has remained a constant, giving it a unique status as a reliable, time-tested asset. Unlike many other investments that are affected by market cycles, corporate performance, or economic policies, gold holds its value across generations. Whether you look back a few decades or a few centuries, gold has consistently preserved its purchasing power. When you invest in gold, you're choosing an asset that doesn't lose its worth over time. In fact, it often gains value, especially during periods of financial instability. Gold's resilience is a big part of its long-term appeal. Stocks, for example, can yield high returns, but they also come with risks and volatility, especially over shorter periods. Cash, on the other hand, tends to lose value over time due to inflation, meaning that what you can buy with $1 today may cost you a lot more in the future. Gold provides a balance. It doesn't lose value in the same way that cash does and isn't subject to the same risks as stocks or bonds. It's like having a financial anchor that keeps your wealth steady, even as the economy changes. Another factor that contributes to gold's long-term value is its historical performance during crises. Over the past century, gold prices have spiked during times of war, recessions, and market crashes. This is because gold acts as a crisis commodity, a go-to asset for investors looking to protect their wealth. While other investments may lose their value during these times, gold often increases, preserving and even enhancing its worth. Gold's durability also plays into its long-term value. Unlike other assets, gold doesn't deteriorate or lose its properties over time. It doesn't rust, tarnish, or degrade. Whether it's stored in a vault or crafted into jewelry, gold maintains its quality, making it a highly reliable way to preserve wealth. This is why people often pass down gold as a family asset, knowing that it will retain its value and utility for generations. Additionally, gold has a universal appeal, transcending borders and cultures. Unlike currencies that are tied to specific countries and influenced by local policies, gold is valued globally. It's a trusted store of wealth from New York to New Delhi, meaning it's not only durable in value, but also highly liquid. This universal value means you can buy, sell, or trade gold practically anywhere, which is why many view it as an ideal long-term investment. Investing in gold now means you're adding a lasting, secure asset to your portfolio, one that has a proven track record of holding value through every kind of economic condition. When you think about building a financial future that you can count on, gold offers a way to ensure your wealth will stand strong over time. It's one of the best ways to secure your assets for the long haul, giving you confidence that your financial foundation is stable and resilient no matter what happens in the market or the world. In short, gold's long-term value isn't just about today. It's about tomorrow, next year, and the generations to come. By investing in gold, you're building a legacy of wealth preservation and stability, an asset that can support you and your loved ones for many years into the future. In conclusion, gold stands out as a remarkable investment, not just for its beauty and history, but for the many ways it can strengthen your financial future. From acting as a hedge against inflation to providing stability during times of economic uncertainty, gold is a powerful addition to any portfolio. It has the potential to increase in value, especially as demand continues to rise and global challenges persist. Plus, its unique ability to hold long-term value makes it a smart choice for building wealth that lasts. Whether you're looking for a way to protect your assets, diversify your investments, or simply prepare for whatever the future holds, gold offers a reliable solution. By investing in gold now, you're making a proactive choice for financial security, resilience, and growth. So, if you're ready to add stability and strength to your portfolio, consider the role that gold can play. Thanks for joining me today, and remember, building wealth is all about taking small, smart steps now to ensure a secure and prosperous future. Here's to making decisions that bring abundance and peace of mind. See you in the next video!